Hi everyone. Let's try to discuss the concept of assertions, which is included in your chapter 4 of Inter Audit. And to take you back to this, what is the chapter that we are, where this chapter is covered, where this topic is covered? It's covered in this chapter 4, which is titled as Audit Evidence. And from the marks perspective, so if we see, this is what is the weightage given by ICAI. Now the audit evidence where the current topic is being covered. Now this is, the marks can come anywhere between 12 marks to 18 marks. So from the examination purpose and from the perspective of examination, it's a master to read chapter. And it basically contains all the 500 series standards. But in this discussion, let us restrict ourselves to this topic of assertions. Now, what are these assertions? Now these assertions, where does the auditor uses, and how do we best define the assertions, and what are the types of assertions? So these are the topics that we talk about. Now when I say assertions, directly moving on to this definition of it, which is given in our SA 315. And same is the definition which is also covered in ISA 315. Now, this assertion, when we use the word assertions, the auditor is trying to assert himself before attesting the financial statements. And where do we use? Normally these are used, though this is also relevant from the compliance perspective, but it is also referred in substantive procedures. When I say compliance, the test of controls, but these are most used in the substantive procedures. Now what is the meaning of assertions? As explained in your ICA material, which is taken from ISA 315 and which is also almost the same or similar definition in ISA 315. Now these assertions are nothing but these are the representations by the management, explicit or otherwise, that are embodied in the financial statements as used by the auditor. Now let's stop over here and get back to it. What are these assertions? These are nothing but the representations. By whom? By the management. This is important. And from your examination, this itself is coming as a part of MCQ, which was earlier being asked as true and fair. Now, what are these representations? These representations are by the management. Some of them are explicit or some of them are implicit. But where are these representations? Now, representations on what? These representations which are that are already embodied, that is, or included, embedded in the financial statements. Which financial statements? Which are used by the auditor. So to put it across, what are these representations? To explain it to the students of it, these are by the management, that is, management want to convey something to whom? To the readers of the financials. So whoever is the reader of financial statements, they wanted to communicate something to the readers. Now these are nothing but the representations. Management want to represent something to the readers, but on what? On the financial statements. That is, the financial statements which are being reviewed by the auditor. Why the auditor is reviewing? Auditor is reviewing to express his opinion. So in the financial statements that are used by the auditor, management is trying to make some representations. Now when I say management is making representations, are they being vocal about it, or are the representations all the time explicit? Not necessary. Some of the representations are explicit, some of the representations are implicit. That is what we call it as an otherwise. Now, this is better explained by taking as an example. Now, if you look at this, which is nothing but your examination question, if the management is, this is not an extract, what they are giving it from a typical balance sheet. Now this is the same thing that you see. They give that plant and machinery, less depreciation, and that is the opening act depth, that is up to the previous year and for the year depreciation. Therefore this is the total depreciation, and that is where you get your WDV, return on value, as in the year. This is the extract from a balance sheet. Now if the management is giving this in the balance sheet, what are they trying to tell? Now, what are the representations they are trying to make it? The management is trying to say that they own this plant and machinery. That is, if it is not owned by them, say, imagine if it is rented by them or if it is taken on a hire, it would have gone to P&L. But because they are showing it in the balance sheet, management indirectly telling that I own this plant and machinery. So the ownership is implied here. The management is the owner of it. The ownership, it is implied. But then when they're showing this value as 4 lakhs, the management is trying to tell them that the cost of this plant and machinery is 4 lakh rupees. And we know that we always record it at historical cost. So the other one the management is trying to say is the historical cost of this plant and machinery is 4 lakh rupees. Now, did they buy it in the current year? You know that it is not. Why do you say, and how can we say it is not bought in the current year? Because there is a depreciation in the previous year. Now, and can I say, is this asset existing? The answer is yes. If the asset is not existing, if it got destroyed in fire or the asset is lost or scrapped or anything like that, we wouldn't have been carrying this WDV. So the very fact that I am showing my WDV, I am reassuring, the management is trying to tell the readers that the asset still exists. If it's not existing, it would have been taken to P&L account as a loss on sale of asset or a asset, the loss being recorded on lost asset or scrapped asset, etc. Now, then another question. Now, is this plant and machinery used for business purpose or personal purpose? It is used for business purpose. You all agree. Why do you say so? It is used for business purpose. Only when you use it for business purpose, you are authorized to, or you are allowed to calculate the depreciation. So coming in a reverse way, when they are claiming depreciation, it is implied that the asset is used for the business purpose. So that is again another point the management is trying to say, that I am using it for business purpose. So if you analyze, by just giving this simple table, the management is trying to tell that they own the asset and the historical cost of the asset is 4 lakh rupees and the asset still exists as to the balance sheet, date of balance sheet, and the asset is used for business purposes. Apart from that, the management is also trying to confirm the valuation of in terms of my depreciation. That is, the value of the depreciation as required by the Companies Act or as per the accounting policies is 1,40,000 is the outstanding balance as of the previous year, and 26,000 is the value of the depreciation for the current year. So this when they give this 2,34,000, they are indirectly confirming that I am confirming to the valuation as required by the standards, as required by the schedules up to the Companies Act, etc. So this is what we call as assertions. Now taking you back to this, when I say assertions, assertions are nothing but the representations by whom? By the management. And is it everything is very vocal or explicit? No, some may be explicit, some may be implied. Like giving an example, in our case, the cost is an explicit one, but the ownership is an implied one. And similarly, the usage, the business purpose is an implied one. And whereas the depreciation cost in terms of its valuation is an explicit one. So these are the representations by the management. Some of them are explicit, some of them are implicit. And these representations are relating to what? These representations are relating to the financial statements. Now, which are these financial statements? Which are used by the auditor? Why the auditor is using? For expressing opinion to the readers. So this is what is my assertion. So to revise it, what are my assertions? These are the representations by the management which are embodied in the financial statements, which are used with that financial statements are used by the auditors. Now one last thing. When you say these are representations by the management, is it that the management is going to give any letter to the reader? So are they going to put it in writing and give it to the reader? No, these representations, they are already embodied in the financial statements. Meaning, when the management is presenting this financials, all these points that we talked about on ownership, the cost of the machine, the existence of the machine, and the return on valuation, and the purpose of the business, these are already embodied. So if you know as an auditor how to retrieve and how to decode that representations, and how much better you can decode that representations, that much better effective the audit is going to be. So all the auditor skills lies in seeing what is that the management want to represent by giving this number, and are they true in it, and by any means are they trying to do any misleading, are they trying to provide any misleading information? So this is what are these assertions. Now if we go back, what are my assertions? I'm repeating. Assertions are nothing but the representations by the management which are embodied in the financial statements which are used by the auditor. Now what are the types of assertions? Now the assertions can be, that is what you learn it as in types of assertions. Now some assertions relate to the classes of transactions, some assets related to the account balances, and some relate to the presentation and disclosures. Most likely, though, you can say that this is P&L related, or this is balance sheet related, and this is overall the presentation related. Now when we say that these are the assertions with regard to transactions, what are this auditor is trying to say? Now what is that management is trying to communicate, which the auditor has to confirm to it. Now occurrence, that is the transactions have really occurred. So that is what the management is trying to say, they have really occurred. Therefore as an auditor I need to ensure that has it occurred. Now I'll show you another example. Now take this statement from the P&L. Now what are the assertions the management is trying to convey by writing this statement in the P&L expenditure? They are saying traveling expenditure 50,000. What is it the management is trying to say? That is, there was a travel and the travel has actually happened. It is not an estimated expenditure. If it is an estimated, it wouldn't be hitting my P&L account. This is something which has actually occurred. The travel has occurred. So that is where we say that one of the assertions with relating to the transaction is audit. When the management says this transaction has occurred, as an auditor I need to verify has this transaction occurred. That is what is this occurrence. So this is whether the transaction actually occurred. This is what the auditor is trying to confirm to it. Then completeness. When we say completeness, again, if I take you back to this example, now the management is showing in the P&L traveling expenditure of 50,000. Then as an auditor, your immediate doubt is this the total expenditure or is there anything to be booked? So that is what we put it as, is this transaction complete or have they recorded all transactions? The word all talks about this completeness. That is, have they recorded all transactions which should have been recorded? That is what we are saying, which should have been recorded. Have they recorded all? If they have missed in something, then as an auditor I would be highlighting those points. Then comes the accuracy. That is whether the amounts and the other data that they are talking about, is it accurate? Is it appropriate? So is this correct? Like when I again go back to this example, when the management says traveling expenditure 50,000, is it really 50,000? Or is it something more? Is it accurate? Is this number accurate? How do I confirm? As an auditor, then I will call out for the invoices. I will call out for other supporting documents like your tickets and other things, and your bills that are submitted for food and related, and your tickets, proof of tickets, either airline tickets or the rail ticket, whatever it is, train tickets and all. I will verify all the supporting documents to ensure that the amount is accurate. That is what is this accuracy angle. And cutoff, that is, you know that all the transactions relating to your financial year have to be recorded in the financial year. Like say salaries of March, you pay it in April, but have you recorded in the March month? Because since the expenditure has already been accrued and has been incurred, you need to accrue irrespective of the payment. So has the management taken this cutoff properly? Like the material which you have received it, then have you recorded them in the purchases? So have you recorded them as an inventory? So that is what this cutoff point, that is the financial year transaction. The transactions have been bifurcated properly between the financial year, taking the cutoff one. Then classification, that is the transactions have been taken to the proper accounts of it. So if I go back and look at it, what are all the assertions that are relating to the transaction? The transactions have really occurred and all transactions have been taken into financial statements, and the amount they have taken are accurate, and the cutoff procedures have been properly taken care, that is the year-end transactions, and the classification is to the proper heads of account. This is what the management is trying to tell the readers. As an auditor, I need to validate this and reconfirm the reader that yes, the financials represent true and fair, which includes these assertions. Now, when it comes to the balance sheet, that is the account balances, the balance exists. This is where you do the fiscal verification. Now, why do I do fiscal verification of inventories? That is when the management says that so much of inventory is outstanding and so much of our inventory is with me in the stores. Then as an auditor, I want to see, is it really existing? Do you really have that inventory with you? I conduct the fiscal verification to ensure the existence. If it is for debtors, then I do the balance confirmation. Why am I obtaining the balance confirmation from a banker, from a debtor or a creditor? I want to make sure that the liability or the asset is really existing as on the date of balance sheet. Similarly, rights and obligations. Now, if we go back to this, when the management says they own this building, do they have really right on it? That is, I will look for the agreement. If it is a movable asset, then I will call out for the invoice. Is the invoice in the company name to say that it is yours? Or if it is building, then do you have the proper papers, legal documents? Is there an agreement? Is there a sale agreement? Is there an encumbrance certificate in the name of the company to demonstrate that the company is having the right on it? Similarly, when the company discloses a loan, do you really have an obligation that whatever the documents I need to verify, I will verify to make sure that all the assets that have been shown in the financials, the company is having the right, and all the liabilities that are shown, the company is really having the obligations. And completeness. This again, all, that is the keyword for completeness. All assets have been recorded, all liabilities have been recorded. And the valuation, in accordance with your accounting standards, you know that the valuation of assets, certain assets, you need to follow the auditing standards. You need to follow the accounting standards. So whether the valuation of those assets have been taken properly in accordance with the guidelines, in accordance with the accounting standards. That is what is the valuation. And these assertions is what an auditor will keep in mind while certifying the account balances, predominantly in the case of balance sheet. Similarly, when it comes to this presentation and disclosures, has a transaction occurred? And is the company having right and obligation? So there is a notes that I give, like say for secured loans or any such things. I give that yes, the company has taken a loan and taken on so and so date from so and so party, and these are the assets they have given. So all that I need to make sure they have disclosed the position of the occurrence of it and rights and obligations in the financial statements. Then completeness, whether all disclosures have been made or all presentation requirements have been met over there. Classification and understandability. Numbers may be correct and the classification may be correct, but have you taken it are you disclosing it in the proper manner? So the way that you are disclosing, is it understandable? The language that you are using, the terminology that you are using, is it understandable? And the classification, is it done as per your schedule 3s, or depending on it, whether you are an NBFC or you are a company or an LLP, whether the classification is in accordance with the relevant respective standards. And the accuracy, whether the way how we have shown, how we have disclosed, how we have presented, is it reflecting the proper valuation of it? So these are what we mean by the assertions and the types of assertions. As a quick recap to it, what do I mean by assertion? Assertions are nothing but the representations. Who is making this representation? The management is making. And where are they making? Are they giving any letter? No, they are not giving any letter. These representations are already embodied in the financial statements. Which financial statements? Which is used by the auditor. Why the auditor is using? To express true and fair opinion on it. Now, if you look at the questions from ICI on this topic, look at this, true or false. He says, assertions refer to the representations by the auditor. Now, this is where you get highlighted. Now, these are not the representations by the auditor. These are rather the representations by the management. Therefore, the statement, without even reading further, you can say that assertion never refers to the representation by the auditor. These are the assertions by the management. So, therefore, the statement is incorrect. And sometimes you may get an elaborate question, 8 marks question. Let's say they say explain. They say risk of material misstatement at the assertion level. Either it can be at the transactions, or it can be at the account balances, or it can be at the disclosures. Now he is asking explain stating different categories of assertions which are used by the auditor. Then nothing but you are supposed to talk about this table. These are the assertions and explain one meaning of it. Occurrence, yes, the transactions have really occurred. Completeness, all transactions have been recorded. Accuracy, the data is accurate. Cutoff, the financial year ending, and then classification to the proper heads of account based on the description. So all this 3 angles is what you are supposed to write. And sometimes he may give you this question for, like how we had asked for 6 marks, he may give you this data, some that extract from a balance sheet, and ask you what are the assertions the management is trying to convey here. Now to repeat it, then looking at it, you got to imagine, you got to visualize. So if you are good with the concepts of it, then you try to understand when the management is giving this table, what is that they wanted to represent. So you have to visualize, and accordingly you have to validate those assertions and then issue the audit report to the reader. Now to repeat it, if this is the balance sheet, extraction of a balance sheet, then what is that management is trying to say? Management owns this plant and machinery, they are the owners of it, and the value, that is, so this is the historical, not the market value. The historical cost of the machine is 4 lakh rupees, and which purpose they've used it? They used it for business purpose. Otherwise, they wouldn't have been showing this, the depreciation in the books of account. And is this asset existing? Yes, the asset is existing. So whenever you are presenting, you are supposed to present, like say similar example, similar case with the different numbers. Plant and machinery 2 lakhs, less depreciation accumulated in the current year, and therefore valuation. Then what are the assertions? The firm owns the plant and machinery, and the cost of it, historical cost. You need to answer questions like, you need to present your statements like this. The company owns the plant and machinery, historical cost of the asset is 2 lakhs, and it physically exists. Why do you say it physically exists? If it is not existing, you wouldn't have been carrying it in the balance sheet. And the asset is utilized in the business of it. Why do you say if it is not for business, you wouldn't have been allowed to carry the depreciation? And then total charge of depreciation from valuation till date so much and current year so much. So, and it has been calculated in a proper manner. So that is how we have to write 4 or 5 statements like this, depending on the number of marks. What did you understand? The representations, what the management is trying to pass on. And other questions would be like this: income statement, that is a P&L statement. Traveling expenditure, what do you say? The travel has actually occurred, and the total cost of the travel expenditure is 50,000, and the company has taken care of the cut-off transactions. So that is, if the travel has been extending from the current year to the financial year, all the expenditure relating to the current financial year 31st March have been taken to the current year, and the following year's expenditure have been taken to the following year. So we need to, and all transactions have been showed from date. And similarly you can ask from debtors. So you can again say the company has a credit sale, otherwise debtors wouldn't have come, and the company is confident of recovering this 2 lakhs, otherwise they would have made a provision for it. So that is how you are supposed to make few statements, like how he has given the statements over there. This is the company owns the asset, the historical cost, the asset physically exists, and it is by use for business purpose, the valuation. So this is how you need to answer to the questions that are being asked in it. Now, so finally, summarizing, what do you mean by assertions? Which standard defines it? SA 315 defines the word assertion. What do I mean by assertion? These are the representations by the management. Some may be explicit, some may be implicit. But are they going to give it in a letter? No. These are embodied in the financial statement. Which financial statements? Which are used by the auditor for expressing opinion. Then, what are the types of assertions? That would depend on the classes of transactions, account balances, and presentation and disclosures. What are relating to this transactions? Occurrence, completeness, accuracy, cutoff, and classification. Now, one question he is asking on, what are these? What is one assertion which is common across all these 3? Now, if you notice, there is a completeness here, there is a completeness here, and there is a completeness. This itself is asking in examination. which is the assertion that is common relating to all these three, that is with regard to the transactions, with regard to account balances, and with regard to presentation and disclosure. So this is how you need to answer for it. Now in our next video we will talk about the next range of questions, that is, he says that the auditor is reviewing the aging analysis. What is that the auditor is trying to do? And the auditor is conducting the fiscal verification. Why is he conducting it? And the auditor is reviewing the agreement of sale. Why is he reviewing the agreement of sale? So which assertion he is trying to relate it to? So that would be a detailed discussion on each of this individual assertions. So that we will have it in our next video. So summarizing from the examination, he can ask you a question, what are these representations? So learn the definition, and he can ask you a direct question on what are the different categories of assertions, different types of assertion. You are supposed to talk about these three: transactions, account balances, and disclosures. Or he can give you an extract either from the balance sheet and from the P&L and ask you to write what are the assertions by the management, whereby you are supposed to say the following are the assertions. So these are the three models of questions that can come in the examination on a topic relating to this assertions. So let's stop our discussion here, and when we meet in the next discussion on assertions, that would be a detailed discussion relating to what auditor practically does, and like I said, doing the fiscal verification, reviewing the agreements, discussing with the management, reviewing subsequent transactions. So why is he doing it? Which assertion is trying to satisfy with? So those angles we will cover it in the next video of it. Thank you all.